There are many ways to increase your profits in the stock market, and one of them is dollar cost averaging. This method is especially useful for beginners. While everyone knows that investing in the S&P 500 index is a good idea, they don't always know the best time to buy it. If you have $10,000 and you invest it all in the S&P 500 index at once, you could make money if you are lucky, or you could lose money. To avoid this risk, you can use dollar cost averaging. It's very simple. Instead of investing all your money at once, you invest it in smaller amounts over time. For example, if you buy when the price is $500 one month and $400 the next month, your average price over those 2 months will be $450. And the longer you use this method, the closer your average price will be to the true average price. This method helps reduce risk because if you buy a stock with all your money right before it drops, you will not only lose money, but also miss out on a chance to buy more at lower prices. This technique is not perfect because if you buy stocks before they go up, you may miss out on potential profits and end up buying them at higher prices. You need to look at good and bad sides of this approach. Personally, I believe that investing is a long-term game and using this technique is better than investing all your money at once. My own experience confirms this. By buying smaller amounts, I was able to buy some stocks at lower prices. Even though the prices dropped a bit after my first purchase, my average price was still low enough to make a profit. Another example, I was buying the S&P 500 index on a monthly basis. I started when it was $384, then $430, and sometimes I bought it at $330 per share. My average price was $393, so when I sold at $431 per share, I made a profit of $38 per share, not including dividends. If I had invested all of my money at $384 per share, I would have had $47 per share when I sold. But if I had invested a few months later at $431 per share, I might not have made any profits for almost 3 years. This example shows that using this technique helped me make the profit. Yes, my profit was a little less compared to those who buy at the perfect moment, but I don't know anyone who can do this consistently. However, I do know that you can consistently achieve the average price using this method. That's all for now. I hope this helps you. Also, consider subscribing to my channel as it motivates me to share more investment tips.